Joining us today is the CEO of Nevada Lithium Resources, trading under the ticker symbol NVLH on the Canadian Securities Exchange, also known as the CSE, Mr. Stephen Rentschler. Stephen, it's great to speak with you and have you on the show.
Aleem, how are you? Thanks. It's great to be here.
Let's start off with a brief description of Nevada Lithium as well as a brief introduction on yourself.
Okay, Nevada Lithium, as you said, is listed on the CSE under the ticker symbol NVLH. And our core asset is 50% ownership of the Bonnie Claire Lithium project that's located in Nevada in the U.S., about 2 hours northwest of Las Vegas. We're an advanced developer with a preliminary economic assessment that was recently completed at the end of last year. And with regards to my background, I've been in natural resource investing for about 3 decades now, predominantly as an institutional buy-side analyst slash portfolio manager for mutual funds and hedge funds, and also working in the communications industry with natural resources companies. So I've been around the block for a while. I've been CEO of Nevada Lithium for a year and a half now, and we're very excited about what we have here at Bonnie Claire.
Steve, you've clearly been part of the natural resources industry for a very long time. Maybe a good place to start is for you to tell us about what excites you about the lithium industry. You know, it seems as if there might be more moving parts than in any other commodity right now, and I'm hoping you can tell our audience how you view this opportunity.
Yeah, the way you put it about so many moving parts is really an excellent descriptor, particularly when you view this industry, with basically the outlook that the industry really doesn't exist. I mean, the lithium industry is basically being born before our eyes. One of the things that I've seen over all these years of investing is disconnects between investors' perceptions and the fundamentals of what's actually going on, at the commodity level. And perhaps the thing that gets me most excited, about the mismatch that I'm seeing here with lithium is just the demand is essentially there. It's baked in because of electric vehicles. There's no doubt about it. Decarbonization, all of this. And it's there through financial initiatives that have been offered. It's there because of, government, I won't say intervention, but legislation that's been put in place. All of this is just driving a tremendous demand. And the supply of lithium that's going to be needed to fulfill that is just nowhere near to be found. If you've been around natural resources, you sort of know that demand basically tracks global, GDP. So it's a couple percent a year. And if things start to accelerate more than that, prices really respond. As an example, when copper goes from, somewhere around 2% a year up to 4% a year, as it has at times, you see tremendous price responses. The lithium industry, the supply that is going to be needed to fulfill the demand is just of magnitudes greater than what we see in a normal commodity. And what I think we're going to see is, price is going to have to be the factor that basically discriminates about who gets the lithium. And the thing is we really don't have any sort of a historical example to look at to see how that's going to play out. So, in a nutshell, what I tell people is I've never been more excited because we have to build a new industry. The demand appears to be baked in. It looks like, now geopolitics are coming in, which makes things even more disruptive and basically adds to, the volatility in prices, which in many ways is an opportunity for companies like ours. It's reflected in things like preliminary economic assessments and preliminary feasibility studies. But it's just so dynamic. And if you're a long-term investor and you can look past some of the wild swings, the opportunity is there because higher prices are really what are going to drive the value in all these projects going forward.
I could not agree more. Stephen, lithium prices have skyrocketed this year, pretty much in a straight line going up. It seems to be a common theme on my podcast where I ask lithium CEOs where they see the price. So I'm going to do the same. Stephen, what do you think, in terms of prices going forward? What are your thoughts?
I think they're going to stay high, and I would probably put out there, whether they're $50,000 a ton, and I'm talking lithium carbonate equivalent here, or 60 or 30 or 85 like they are now. It really doesn't matter because the days of going back to $10,000 lithium, in my opinion, are long gone. we don't know essentially what the cost is necessary. What's the incentive cost to bring in new mines, et cetera? We have no basic cost curve that's put out there. It's all theoretical. We have no historical mines that can be brought out of care and maintenance to come and basically fulfill this need. So the reality is no one knows, and to me, what that means is it's all in the hands of the OEMs or the car manufacturers. I mean, they're the ones who are going to need this lithium the most. And to me, it's basically it's one of these zero sum games. You either want the lithium or you don't. And if you don't have the lithium, you're not going to have a car to sell. Now, there have been all sorts of incentives that have been put into place now. The latest one I'd argue is probably the U.S. government with the Inflation Reduction Act and these, tax credits that have been offered for basically critical materials that are sourced in the U.S. or quote unquote friendly countries. Those EV subsidies at $3,750 a car for just the critical material components, by my calculations, by the time we get to 2030 and we get to the penetration rate that the U.S. government wants, are worth basically almost $100 billion. And that $100 billion, let's not kid ourselves, is going to be going in the pockets of the auto companies because they're simply passing through these tax credits, by basically raising the prices of their automobiles. So that's going in their pockets. That's extra incentive for them to get involved. So in that context, I think you're going to see a type of environment basically opening up here that we haven't seen in a very long time, which is, the end users of this product of lithium are going to be vertically integrated all the way to the mine site. And I think in that kind of a context, prices are going to go much higher for much longer than what people think.
Even though lithium has performed spectacularly well over 2022, it has been a mixed bag for junior developers. Do you have any thoughts on the disconnect, and what do you think the catalyst could be to really get investors excited about the space?
I really think it's going to be direct investment by an OEM into a lithium company, into a lithium, basically a lithium project, not necessarily a producer. Because that to me is going to open the gates. Everybody's eyes are going to say, okay, the OEMs are taking this, really seriously. Now, there's already been direct investment into a lot of the direct lithium extraction projects that are out there. You see often, the most talk I would say, at least in the U.S., is the Salton Sea in California, where they want to, extract the lithium from the geothermal brines. But that's not going to be enough to do it. I mean, all the different types of projects that are springing up in Canada and the U.S., actually around the world, I would argue are going to be necessary to fulfill the supply profile that's going to be needed to meet, demand. So when we start seeing, basically the car companies becoming involved with, sedimentary deposits like ours, or maybe pegmatites and in eastern Canada, or other brine projects, then you're going to know, I think, that okay, folks, we're entering a new chapter here. And if you're a baseball fan, it's analogous to the early innings. This is very, very early. So we're going to be entering a new inning, maybe the top of the second, maybe, I don't know, bottom of the second, something like that, where this all plays out. The car companies in particular, nobody wants to be involved with a mining company. I mean, I remember 20 years ago in South Africa, when everybody was scared, that they weren't going to be able to get catalysts, meaning platinum and palladium, because of South Africa. And so direct investment was made in basically getting, large stockpiles of physical metal, things like that. And, it didn't turn out terribly well for the car companies. Now, a lot of the people who were involved with that, frankly, have retired. But the reality is that the people involved with sourcing this material from different areas of the world, et cetera, this is not the thing that they normally do. So there's a learning curve that these companies have to go through. We have to give them a little time. Other companies like ours, I'm sure, are all trying to talk to them, et cetera, find the right people. But I think finally when it happens, when the announcement is made that somebody's invested into a mine somewhere, vertical integration or a project, I think that's going to be the thing that really ignites all of the lithium industry going forward.
Steve, let's switch gears for a minute and have you tell us about the Bonnie Claire project you have in Nevada. You have a recent preliminary economic assessment that used lithium prices that are a fraction of the current lithium prices today, and a lot of work continues to be done on the project.
Yeah, we're obviously very excited. When you look at something like a preliminary economic assessment, and often you'll have tables in there that are provided by the authors that show the sensitivity to basically different constraints. In terms of how much does the value increase, given a change plus or minus 10%, different things, cost, the capital expenditures, the price of the underlying commodity. Well, ours is, tremendously sensitive to change in lithium prices. So, we had, a very, very solid, robust, I would say, preliminary economic assessment at $13,400 a ton LCE prices. And that was basically about this time last year, ballpark. Quickly prices ran up to $40,000 a ton. And, it shows, given those types of prices, we just have a tremendously high net present value, a real needle mover for any strategic that would want to get involved with us because of that. And it's one of the reasons I tell people, whether lithium prices are 40,000 or 80,000 or $50,000 a ton for our project, it really doesn't matter, because it's just, net present value, multi-billions of dollars, after tax rate of returns, well into the 30s, 40s, 50%, around $40,000 lithium. This is a very, very attractive, long-lived asset. What we would be planning on doing is basically producing 32,000 tons of lithium carbonate equivalent for 40 years, with the possibility of basically producing lithium hydroxide. And when you think about lithium in the battery space, those the two main things that you're going to hear about are carbonate and hydroxide. And the reality is we've been continuing to de-risk this PEA with continued drilling, get a higher confidence in basically our resource, and also to de-risk the metallurgy that's going on. So we've been successful in both parts. We've been releasing additional drill results, some very deep holes to see what we have there. We've been finding high grade coming up very close to surface. Looks like we've got correlation between the holes as we step out farther, which we're now able to do because of an expanded permitting footprint. So we have a lot of things that are going on. We're ahead of a lot of other people. We're going to be working towards pre-feasibility studies, so that's additional de-risking that's going forward. And we're just very, very excited because, again, we have this backdrop of lithium prices that, really have no end in sight, and frankly, of which I'd be perfectly happy if they just stayed where they are.
Steve, I've been following the story, and I do see the drill results coming out. Do these results change the story in any way?
They just make it better. Everything else being equal, you always want to see higher grade coming to surface. We have the potential to mine this resource in a couple of different ways. The one that we've chosen is called large diameter borehole mining, which we're testing now the geophysics to see if that will work. But the reality is, if you have to remove less overburden to get to a higher grade and can get to it earlier in the mine life, the net present value is more beneficial to the project. So, we're happy to see this. Obviously, this is one of the interesting things about the exploration component of what we have at Bonnie Claire, because Bonnie Claire is a huge property. It's literally 1.25 times the size of Manhattan Island. And if you think about that, we're basically going across the bottom half. You want to say Midtown and Manhattan South is where we're at, and poking holes in. We have a couple more holes that we're expecting to come out relatively soon, and hopefully they will show the same sorts of results. So, it's one of those things we're very blessed. We're very happy to see what's coming out, and I would just look at it as if it's just icing on the cake, what we're seeing now with these drill results.
Yeah. The land package at Bonnie Claire is certainly big, and I don't think people realize how big it is. Stephen, we've seen how fast lithium companies can start getting tremendous volume and attention from a good discovery. Most recent example would be Surge Battery Metals a couple weeks ago, and before that, Nevada Sunrise. Stephen, what will it take for Nevada Lithium to get this type of attention from the market, and why do you believe that Nevada Lithium is undervalued right now, given the positive results and attractive project?
It's interesting, and I mentioned, I think, at the very beginning, is that I've often seen these disconnects as being as an institutional investor over many years, where investors are focused on one thing. And I would argue there's been a very large exodus of investors over time, particularly into high tech, into cannabis, things like that. And they're only just now starting to I think, return. So the focus, I think, of those who've remained has been sort of very not historic, but it's the way it always was when drill results were always sort of the driver. That was the excitement, et cetera, things like that. But the thing is, we already had preliminary economic assessment, right? So that's integrated the drill results that we already had into basically a first look at what the economics of this project would look like. Whereas if you were just go out in the field and drill something and get results, you really have no idea, frankly, what it means, though obviously higher is always better than lower. I think in our case, it's going to be a realization that, hey, the PEA is already done. The de-risking is very important. There are going to be certain milestones that frankly we've talked about that are going to be, I would say, even more important than drill results, which are, metallurgical results, which are, can you actually produce a battery grade carbonate? Because I think what a lot of people forget is that a lot of these projects are not going to be able to produce something that's of sufficient purity to actually go into one of these lithium batteries. So I think that's going to be important for us. We're hoping to announce that early in the spring. And I also think that it goes back to what I was saying. It's going to be direct involvement with a strategic of some sort who basically, is by putting their investment dollars, at risk, saying, hey, yeah, we understand the need for this. We think this is a good project and, we want to be involved. And all of that is basically something that we're working at Nevada Lithium. So, I would say to people, hey, we hate to see what's going on with the stock price right now. But understand, as you follow our news, good news continues to come out, and it's just de-risking the project and unlocking the value even more.
That leads into my next question. What are some upcoming catalysts that shareholders and other potential investors can look forward to going into 2023?
Well, we're going to have the very short term, I'd say, additional drill results coming out, which are going to, have implications for upgrading our resource as we work towards a preliminary feasibility study. We're going to have scientific results coming out that are going to help determine, whether large diameter borehole mining is going to be the preferred type of mining method at Bonnie Claire. We're going to have the announcement, we hope, of battery grade carbonate production. Also, hopefully, hydroxide production coming from the lab sometime in the early spring, which should be monumental news, in my opinion. And what I hope is, as we continue to work towards the goal, is that we'll be able to announce, a partnership with, some sort of a strategic who wants to get involved, with the company, who understands, the scarcity of lithium and the benefit of having something sourced in the U.S. to be able to take to take advantage of things like the Inflation Reduction Act and just the overall security of supply that comes from getting material in, Nevada, USA, which is arguably always one of the top 3 or 4 mining jurisdictions in the entire world.
Lastly, where can investors find out more about Nevada Lithium and your project, the Bonnie Claire?
The best place to go is nvlithium.com. We try to keep everything up to date there on the website. At times we've done stuff with social media and hope to be cranking that up a bit more. I mean, sometimes you go through these phases where a lot of the work that's being done is behind the scenes and doesn't necessarily generate I would argue, the excitement that it should. But we hope to be having a lot to say soon. So, keep your eyes out on our Twitter, Instagram, etc. But in particular, go to the website. That would be great.